Hello everyone, today is Friday, April 16th, 2021. My name is Evan. Welcome back to our weekly stock market analysis videos. If it's your first time tuning in, first time catching one of these videos, welcome. It is nice to have you here. We break our analysis up into two parts. In part one, we look at everything that went on this week in markets. And then in part two, we jump into the charts. We look at some longer term trends. We take the data from the first series, first part, and put it into context, try and make some sense of what's going on and how to best position ourselves looking ahead. Hopefully that sounds good to you. Let's jump into some of the headlines, some of the takeaways from this week's action. We've got a lockout rally underway, and I'm sort of stealing that term or borrowing that term. I don't know if that's common lingo, but I've heard it used, and I like what it represents. And it basically means that the market is, melting up to the upside. It is relentlessly rallying day after day. We're not seeing any pullbacks. We're not seeing it really take a breath at all. And we're essentially in this point where if you want to get involved with stocks right now, you're forced to pay up. You're forced to kind of chase this market, hence the term lockout. It is essentially locking new buyers out of this market unless they are willing to spend top dollar. So that's what's underway right now. We're going to talk about that when we look at some of the charts. We had earnings season officially sort of kick off with bank stocks, a few of the big mega caps reporting this week, and the market responding pretty favorably so far. We saw basically rallies across the board in financials and those names specifically. And we saw the bond market bouncing this week as well. The bond market clearly has been a very tough place to be. It's been selling off for the past handful of months now, seems like forever. But we saw a little bit of a rebound there this week across the board. We'll talk about that later in this video as well. So if we look at equity market performance, take a look at the right-hand column here. Basically, everything universally here across the board in the green. We saw about 1 to 1.5% across all equities. Nasdaq, S&P 500 up the strongest. World stocks actually were up the strongest. So if we take out the United States and look at the world, minus the United States, those were actually up in greatest in terms of percentage terms. If we look at market internals, very, very strong week here. Number of NYSE net 52-week highs minus lows pulling in over 1,000 this week in aggregate, 1,367. That's a very healthy number. Shows that there's lots of underlying strength. It's broad and it's spread out across many different sectors and individual stocks. That's exactly what you want to see in healthy uptrends. The AD line you could see was up around 1,700, not as strong. Still would be, expecting a little bit stronger there, but it fits kind of the narrative and fits within the realm of what we might expect. And percentage of stocks over 20 SMA, 87% here now in the S&P 500. That's starting to run a little bit hot. That's generally where we can now probably start to expect maybe some, breathers or stabilization or a little bit of pullback. But, as we talked about, market really hasn't been too kind for anyone looking for that over the past week or so. So that's what we're seeing there. In the short term, it suggests that we are pretty overheated and extended in the short term. If we look at the cumulative NYSE 52-week highs minus lows summed up, so in aggregate rolling, so to speak, rolling numbers here over the past 30 days, you can see this trend remains just very constructive here up and to the right. Again, this is exactly what you want to see. One of my favorite charts to look at when I'm gauging the health of the U.S. market, and right now that is still suggesting that things look good. Doesn't speak again to the very short-term nature. Can we have a 2%, 5%, 7% pullback? Absolutely. But as long as this is, moving up into the right here, I am, looking at dips as opportunities. I am looking at this market as favorable. That's sort of the outlook until some of the data suggests otherwise. If we look at sector performance this week, nearly everything was up. We had utilities at the top of the list, which is a bit interesting, 3.67%. We saw materials in the second spot and healthcare in third here, up 3% if we're looking at this 1 week column. On the downside, communication services was slightly negative, energy slightly green, industrials a little more in the green there, 0.62. It is not the most ideal to see healthcare utilities in the top of the bunch here. Usually, they're seen as more defensive areas of the market, so not the best, but hey, we'll take it with only one sector in the red. If we look at correlations here, so a couple of things stand out to me. One is still the dollar, which we talked about last week. We had this very strong negative inverse correlation here with the dollar to what equity markets are doing. In fact, I think that correlation got even tighter here over the past 10 days. So if you just look at this, you can look at this row right here. So for UUP, which is the dollar, it's got a minus, 0.84 to minus 0.92 negative inverse correlation to the Nasdaq, to the S&P, to the Dow Jones. So basically what that's saying here and showing and illustrating is that as the dollar falls, which it did this week again, everything here in terms of equity land is benefiting. And we also have this other correlation, which is starting to strengthen here, which is with yields. So the 10-year yield is also coming in at a pretty strong negative inverse correlation. So as you have yields falling, you have the dollar falling, you have basically equities and stocks which are enjoying that sell-off in rates and in the dollar. And that does, sort of jive and make sense. And we're seeing that basically play out here this week. If we, see a big jump in the dollar strength, if we see a big jump in rates, then, maybe that's the pressure that we, finally get us that pullback in the equity markets. So that's really kind of the standout that I'm looking at on this slide. Take a look at this yourself, though. See if there's anything else that stands out and looks interesting to you. Leave a comment below. I'd love to hear it. They always get kind of the most questions on how to use this. There's lots of different ways you can use this, and we don't want to. It's tough because I don't want to overstate the importance of this. I don't want to make it sound like there is always sort of causation behind this. It's just a tool to sort of understand narratives that are potentially driving the markets and seeing what is potentially impacting other areas of the market. And there's, different ways to interpret that if you're a discretionary trader, or if you're more systematic, there are certainly opportunities you can make in terms of pairs trading on these types of things and all kinds of fun stuff that go way beyond the scope of this video. So let's move on to volatility. Volatility this week, really not doing a whole lot different. So we're settled down into a 16 VIX, which is, again, new territory here. It's not what we've seen, any time really over the past year. We're away from the 20s. We're settling back into more historically sort of normal territory for volatility. That's constructive, and that continues to be the case. So we fell a little bit this week. Term structure is pretty steep here on the 1 to 3 month. So a 3 month VIX is still up around 20. The spot front month here is at 16. So it is pretty steep, but that's kind of what we got right now. And there's obviously some opportunities you could take advantage of there, on terms of the option side. Now, interest rates and credit markets. So we talked about yields were falling this week. Bond prices were up. We're seeing that here. That was constructive. Investment grade, high yield bonds, both rallying a bit this week as well. If we look at the dollar, dollar was down this week, 0.64%. So that's a pretty strong move to the downside. And we can see the 1 month numbers have now moved negative for the dollar. Remember, for the past month or two, the dollar was sort of rebounding and rallying to the upside. And then over the past, basically 2 weeks now, we're starting to give that up. Gold was up, silver was up, Bitcoin was up, ag was up, WTI was up, natural gas was up, everything enjoying the dollar that is rolling over. So if we look at the report card from this week, we got almost check marks across the board. Only thing that is standing out is the fact that we saw risk sectors underperforming, basically. So we had, again, those healthcare utilities at the top of the list in terms of relative strength. It's not the ideal order that you want to see out there. Everything else, though, does kind of fit and suggest things are looking pretty good here for the bulls. So we got an A- for our report card. And if we finalize things here with the two trading systems that we're trading here at the trade risk, we have our first system is basically enjoying this market rally. It's positioned very strongly, as it has been, to the long side. It's holding 45 positions right now. It's essentially 100% invested in this market and naturally doing some pretty good, pulling in some pretty good performance. Our Lamerick trading system, so this is our shorter term system. This started to look into the short side basically late last week, and clearly it's been a little early, and this week wasn't the best week for this trading system, as it's been basically trading on the short side, and it's still seeing some opportunity on the short side. It's still looking at the data saying, hey, this market's moving way too fast to the upside. We see some opportunity here. And right now it's paying the price for being a little bit early, but it's still on the short side. That's where it sees it. And that's, again, its outlook is about a week or so. That's what it's looking at. So it's much more short term versus Merlin here. We trade both of these systems. So, if you're looking at both of them, if you're holding positions in both systems, then you're pretty balanced. I mean, you're technically net long, but you'd be having essentially some hedges on the downside, and you have some of the core holdings on the upside. That's exactly how these systems work well together, and you basically want to see them do different things at different times or at the same time. So that's currently how we're positioned going forward. If you want to learn more about the systems, there's a link appearing in the top right hand. Check them out, learn more about them, and see if they're the right fit for you. And we'll be back in just a moment with part. All right, we are back. We've got TC2000 open. We're looking at our equity market grid. Got S&P in the top left, Nasdaq top right, Russell in the bottom left, and ACWX, which is international stocks minus the US, in the bottom right. We're looking at price itself is the white dashed lines you see on all these charts, and the multicolored dots are a custom smart trend filter that we've developed for TC2000, measures price and volume across time, helps us determine trend and trend strength. So if we look here at the weekly time frame, we have green dots across the board, which basically suggests to us that life looks pretty good here for equity markets. We've kind of known that, and really nothing has changed except for the Nasdaq. So if we look in the top right here, remember the Nasdaq was under pressure, kind of the greatest here into the basically month of March. Throughout March, we saw, the underperformance and sort of the sell-off in tech land, and we did get some yellow dots printing here, but that is finally back to a bull by green signal here on the weekly time frame. And so that's basically been the only adjustment or change when we look at the longer term trends. When we look at the shorter term trends and we go down to the daily chart, the S&P 500, again, no real change here. This was already kind of signaling bullish positioning here as of a few weeks ago towards the end of March. The Nasdaq as well on the daily chart flipped up coming into April, and then we've continued to see some price advancement there. The Russell has really been the one that's been lagging now more recently on the daily chart, and you can see just how choppy this pattern has been here. Basically, price just oscillating up and down, but moving completely sideways. Our smart trend filter is basically getting kind of chopped up here, and you're seeing mostly yellow dots printed, and that basically is telling you that there's lots of indecision here. But if we look on Thursday, we did get the Russell 2000 that turned up here. So it printed a green dot on Thursday, stayed with it on Friday. So maybe we're starting to finally lift up here in the Russell 2000. And we'll have to pay attention to that. ACWX here on a trending daily basis is on a buy signal. It wasn't a buy signal last week, so no real change there as well. So let's jump into some candlestick analysis here. Let's look a little bit closer at the price action here. Let's look at this lockout rally. This does look like a lockout rally because we're going pretty well, I don't like to use the word parabolic too lightly here, but we're starting to get pretty vertical in the way we are moving. If we recall, the S&P 500, let's see, I guess we had this old channel that was developing in here. And you can see we're kind of back on track maybe on this sort of slope. We broke down, in March or late February, early March, and then we were kind of off track here again late in March. But now we're back in this channel. Maybe this is kind of the new landscape that we're looking at, and maybe we do have a little more to go here. Maybe it's up around 4,200 where we'll start to hit the top of this channel and kind of sell off a little bit. I'm not holding too much weight on that. These, you draw this as you will, and I'm not a huge fan, but I mean, it carves out the price action. It helps us know what's going on here. A couple of other ththings I like to look at. Well, actually, first, let's just go to this chart, because this is before we move into some other technical indicators here. I mean, this is, the last breakout was around 39.80. This was the relevant level we were paying attention to. So the S&P 500 broke out on Thursday, had a strong follow-through day on Monday, the 5th, and then we've just been off to the races since. From a pure sort of TA perspective here, can't be that surprised with the price action. We're trading at all-time highs. We had this multi-week pattern breakout that was basically, a breakout on Monday, and again, that follow-through day the day after. I mean, that is as bullish as one could expect or get in a market trading at all-time highs, recent breakout, strong follow-through and continuation day. So with a market at highs, you'd basically expect a trend up to continue or to persist from that point, and that's exactly what we're getting. We're just not getting much give back, right? It's been a relentless markup to the upside here, and that's going to change. And whether or not that changes, early this week on Monday, and we start to get some type of pullback, or it's later in the week or the week after, I mean, eventually we're going to get that pullback, but markets are making it difficult right now for those that are not invested. So when we look here at the S&P 500, the most relevant level is still down here around 39.80. So, that's basically 5% below where we're currently trading. Basically, as we start to dip, if we can dip and get a few percent off of highs, then, that's where I'd be starting to look at to, get involved in this market if I weren't already. If I look at the Bollinger Bands here, I think this is pretty interesting to look at. Now, Bollinger Bands, they're a technical indicator, but they're just a tool. So let's not overemphasize anything here, but it's worth pointing out. So if we look here at the S&P 500 on a weekly time frame, we can see that we're getting closes, in fact, 2 consecutive closes outside of the upper Bollinger Band. And if we just kind of scroll back here, this doesn't happen all that often. So the S&P 500 doesn't traditionally spend a whole lot of time above the upper kind of 2 and 20 Bollinger Band on the weekly chart. Now, one period in particular where it did, if we have to go back, and for those of you who are trading back in 2017, 2018 period, this is an interesting period because this is where the market started to get very vertical in the fourth quarter of 2017 into January of 2018. And you can see we got multiple closes outside of the Bollinger Band, led to some consolidation. And then, especially here, this 4-week period coming into January is when the market got really stretched to the upside. But then look what happened a few weeks later is we had this very volatile, sharp correction downward here in just a 2-week period, giving back, a couple of months. So this is an interesting kind of situation because we know the S&P 500 doesn't spend a whole lot of time over and outside of the Bollinger Band here. So, the scenarios in your head to play out is maybe this is just the beginning of a frenzy of buying that can really, if you thought you saw buying these past few weeks, then get ready for what could happen in the next, 6 weeks through earnings season. That definitely could be a scenario. We are here to not predict, but just keep an open mind of the path that the market might take. And then we have the other side of the coin is when the momentum stops, when the buying is just no longer there, that marginal new buyer just doesn't arrive. We know that markets can correct pretty quickly from those extended levels. So all is to say, it tells us a little bit about where we are. We've covered a lot of ground, and we've seen it in the past where markets can get kind of silly as they start to really reach for very extended levels. They're trading at highs right now, so that late 2017 example is in the back of my head. Again, not a prediction, but I'm just watching that as a possible scenario. And if we start to lose that momentum, then that's where your risk management sort of wants to, start to kick in and protect yourself if we start, selling off more abruptly and breaking those trends. So that, I think, is just an interesting thing to keep in the back of your head there. And same goes for the Nasdaq 100. Basically, right now, you can see it's also starting to lift over its weekly Bollinger Band. And again, very similar comments apply when you look back in time. Doesn't happen all that often. So that's the S&P 500. Let's actually just talk about the Qs now a little bit. If we look here at the Qs, you can see, again, we're at new all-time highs. We broke the old high here from February, and this has been pretty relentless bid up here, not letting really anybody in. We've got a lot of tech that is coming up in earnings, starting maybe late next week and then the following week. So we'll have lots of companies here. And again, earnings season, I think we all know, or I think the market is pretty ready for the actual numbers are going to be probably a pretty easy comp to beat from year over year or quarter over quarter. But it's really the projection too. It's the guidance, right? The market is always looking to see what the future holds, and they'll start pricing that in pretty quickly. So it'll be very interesting to see how companies are projecting in this environment. And that I think is what markets are going to be looking at. So this is Nasdaq. And then if we finalize here with the Russell just not really doing a whole lot. And that's kind of the same thing. We showed how our daily trend filter had started to turn up. So it's an early buy signal, but from, classic sort of supply demand here, this is just very much still in a very sideways range. No breakouts here that have occurred. And that seems to be, kind of still persisting. So hopefully that was helpful. In terms of major markets, let's look at a couple of other markets here. And if we look at TLT, so you can see TLT here on, let's go to a daily chart of the TLT. So TLT, if we look at our daily trend filter, transition, so it printed some yellow back here right at the beginning of April. And then we got our first buy signal on TLT on Wednesday the 7th. And since that point, it is slowly kind of grinding higher. It had a good week this week. If we look at the weekly trend, this is still very much bearish. It's rallying up to its trend filter here, but you can see kind of the cross currents here across different time frames. And if we in fact just look at the TLT with some candlesticks, you can see here it had a big pop on Thursday. Gave some of that back on Friday, but good volume came in on Thursday as well. And it's starting to, maybe contend with some of the supply in here from late February, early March, when we started to chop around a little bit before rolling back over. So TLT, clearly, you get some momentum, positive momentum divergence. It is trying to collect itself. It's trying to rally, and we'll see if this can continue. I do think, if TLT rallies, that is ultimately good for the market, or particularly, I guess, growth stocks. And that's an encouraging thing if you can see the TLT stabilize. Even if it's just stabilizing, as long as it's not cascading lower, is going to be a good thing, I think, for equities. So that is important. We saw the dollar, which continues to roll over here. Again, this is moving pretty inversely correlated to equity markets. So as the dollar rolls over, equity markets like it. Dollar is arguably a little stretched to the downside right now, oversold a bit. So it could easily start to pop here, put pressure on equities. So keep that in the back of your head. And we have gold and silver, which are rallying as well. So you can see they're still kind of in messy, longer term patterns, but in the very short term, they had a good solid week, and they're trying to, move up and, start to repair some of the damage that they've seen. So that is some of the big kind of markets there and moves that I think is, and oil. Oil was one. I think I posted this chart on the stream. So we got that breakout in oil from this range. We talked about this last Friday, remember? So we had the sideways range in here, and then last Friday we had these back-to-back inside days brewing, and we basically said, hey, this is something to pay attention to for this week, for some volatility expansion, for some range expansion here. We got exactly that this week. We got it to the upside, so it was a bullish development because we resolved to the upside here. So momentum's back in play. Old highs up here around 44 and change. So let's pay attention to that and see if the buyers can get back on trend. So lots of very sort of clean moves happening this week between equities, bonds, dollar, metals. There wasn't a lot of chop going on. Things were moving directionally this week. Now, let's finalize here with some of our sector and industry analysis here. I'm going to run through this pretty quick. So if we look, let's just look at sectors first. We look at some of the sectors. So this list up here, top left of my screen that I'm looking at, 22 sectors and industries. This is, these are bullish developments here. So I have a particular scan I'm running, looking for, essentially constructive activity from a price action perspective. So if you look at the sectors, a lot in financial services and a lot in healthcare, real estate this week as well. So you're not seeing much tech. In fact, only one tech. So there wasn't a whole lot there on that side of things, or communication services or anything like that. It was very healthcare, financial, defensive, and some materials that were showing up here. So if we look at this list, here we go, right down here. I'm not going to do analysis on all of these, but you can see here, so metals and minerals, copper. So again, back to that basic materials, paper and paper products. These things were all working this week. Again, I don't know if traders are too focused on those, so this is why it's good to see the sectors, industries that are actually moving. Recreational vehicles, lodging, both doing pretty well on the cyclical side of things. Then we had some defensive things working, so packaged foods, farm products, grocery stores, and beverages all sort of working, breaking out or moving to highs. Then we saw a lot of financials. So again, this reported earnings, some of these banks reported earnings, giving a lift up to the sector. So various, kind of insurance brokers that are all working themselves higher. And then we had a bunch of healthcare also working this week. So in between healthcare plans, drug manufacturers, and then the medical instruments, medical distribution, all sort of working higher as well. And then we saw real estate and different healthcare facilities, residential and retail, all sort of working here on the REIT side of things. Last but not least, we had one software infrastructure industry that was working here, breaking out to new highs. On the downside, so there were three on the downside. So one was tech. So in fact, data storage here. So if we look at a weekly chart, so look at data storage closing the week on the lows down 5%. So clearly this is not doing what the broad market did this week. So there's some underperformance, clear catalyst to the downside. We saw gambling was very weak this week. So gambling closing towards the lows, a little increase in volume there. And we saw this industrial metal fabrication, which I don't know exactly what that would even entail. Let's see, 14 stocks that make it up. Don't recognize a whole bunch. So that's the list there for things that were sort of underperforming a bit this week. So that's it. That's what I got for this week's video. Covered a lot there and a little bit longer. So thanks for bearing with me on this long episode. Hopefully it was helpful. Hopefully you enjoyed it. Leave a comment below if you did. Let me know what you thought was interesting or any other analysis that you're looking at heading into next week. What did I miss? Leave a comment below. I love to see what everybody's looking at. And as always, I thank you for tuning in and listening. Every Friday, we do these videos, long form market analysis once a week. And you can subscribe on our YouTube channel or on thetraderisks.com. You can always catch the latest episodes there as well. Have a great weekend. We'll see you back here next week.